Have you seen headlines like this recently stating that people that have high credit scores with a large down payment are actually being charged more than people with low down payment and low credit scores for their interest rate? Is this actually true? Well, that's exactly what we're going to talk about on today's episode. Hi, I'm Josh Alexander, host of Orange County Housing Market News, your one-stop shop for all things Orange County real estate. I put out different tricks and tips for buyers and sellers every single week, so if you're thinking of buying or selling a home somewhere inside Orange County, make sure you don't forget to hit that subscribe button and hit that bell button too if you're watching this on YouTube. That way you get notified every time I put a new episode out, so that way you don't miss any good information. So today, let's go ahead and look at the most highly controversial topic over the last 2 weeks, which is the loan level price adjustments that have been causing havoc in the news. Let's go ahead and get into it. Okay, so I'm gonna make this a very quick episode. I'm just going to cover 3 basic things. Number 1, the biggest misconception about these new loan changes, and then 2 and 3, the pros and cons to them, so that way you can make a better, more informed decision to figure out if this is something that's going to benefit you or something that's going to hurt you. So the number 1 misconception, again, thanks to headlines like this, is people are starting to think that if you have a high credit score and a high down payment, that you're going to get a worse interest rate than someone with a low credit score and a low down payment. And that is causing a lot of people to start saying to themselves, should I intentionally lower my credit score so I can get a better interest rate on my loan? This is absolutely 100% false. If you have a high credit score, you're always going to get a better rate than someone with a low credit score, with all the financials being the same between the two. So that's the biggest misconception that I want people to understand, because I don't want you going out wrecking your credit, then just to realize that, oh, that headline I read, I didn't actually go into the article and read the content of it. I just thought that I needed to have a lower credit score so I can get a lower interest rate, because that is absolutely not true. The people that have high credit scores and a high down payment are still getting the best interest rates. The biggest change that this program now brings is that there is a smaller gap between people with lower credit scores and higher credit scores in terms of what interest rate they get. And yes, people with higher credit scores and higher down payments are being charged a premium compared to last month in terms of what they're getting on their interest rate, which I don't like, the National Association of Realtors don't like, and most people that have been responsible, paying off their credit cards on time, saving up that down payment, obviously don't like as well. So that is the con of this whole program, is that if you have good credit and you've saved up that down payment, you're basically getting penalized for it, which is why there's so much opposition for this. However, I also want to bring up the pro side as well. So for those that have been struggling to get the down payment they need, that have been struggling to get their credit score up, but just haven't been able to get it to the very high 7s, are going to find this program is going to save them every month on their mortgage and might help them get over that hump into home ownership that they might have been trying to do for the last couple years, but just couldn't get there. So on the lower end side of things, I can obviously see that there is a benefit for those taking advantage of this program when you are going to get a better interest rate now than you would have last month. But again, I want to emphasize that interest rate that they are getting is still going to be higher than the interest rate someone with high credit and a high down payment is going to get. So again, is this a good solution? I really don't think so. There is a lot of pushback on this. I wouldn't be surprised if some of these rules were eventually changed because there is so much outcry, but I just wanted to at least give you the facts about this program so you can understand that there are pros and cons, and that overall they were trying to help people get into homes, but I just don't think this is a great way to do it. Now, do you think this is a good way to do it? Let me know your opinion in the comment section below. I would love to see what you think about these new changes. And until next time, stay healthy, stay happy, and I'll see you on the next show. Bye, everybody.